If you're a small business owner in the UK, you need to listen up. Because starting in 2026, the entire financial landscape you operate in is set for a massive overhaul. And honestly, not being ready for it could be a very costly mistake.
So let me just ask you straight up. Is your business actually ready for what is, without a doubt, the biggest tax shakeup we've seen in years? Because ignoring this isn't an option. It could mean facing some pretty hefty penalties and a real hit to your cash flow.
Now, I know this stuff can seem complicated and, frankly, a bit daunting. That's exactly why we've teamed up with the experts at My Tax Accountant. They live and breathe this stuff, and they've put this guide together to help you cut through the noise and figure out what's actually changing.
Ready to get into it? Okay, here's our roadmap. We'll kick off with the new financial year, then dive into your core business taxes. After that, we'll look at what's changing for your team, the big shift to digital, some key reliefs and investments, and we'll wrap it all up with a clear action plan for you to take away.
So, first up, a new financial year. Let's set the scene. Basically, the autumn budget of 2025 really got the ball rolling on all of this, with most of these major changes set to kick in from April 2026. The official line from the government is that this is all about making the tax system fairer and fit for the 21st century. You'll hear that phrase a lot, but what does everyone being asked to contribute actually mean for your business's bank account? Well, let's get into the details.
Okay, Section 2. Let's talk about the big ones, your core business taxes. We're talking corporation tax and business rates. These are the bedrock of your finances, and you absolutely need to know what's coming.
Let's start with a little bit of good news, shall we? A bit of stability. The main rate of corporation tax is being capped at 25% for the life of this parliament. So for your medium-term planning, at least you know where you stand on that front.
But, and this is a huge but, here's a pro tip for you. While the rate is stable, the penalties are not. From April 1st, 2026, the penalties for filing your corporation tax late are set to double. Yes, double. HMRC is sending a very clear message. Deadlines are not suggestions.
Now let's look at business rates, because this is a real mixed bag. On one hand, there's some good news. If you're in retail, hospitality, or leisure, that 40% relief on your bills continues. Great. But on the other hand, they're bringing in a new high-value surcharge for properties with a rateable value over £500,000. It's a classic case of giving with one hand and taking away with the other.
All right, let's shift gears and talk about your people, your team, because some of the biggest changes are coming to payroll and pensions, and this will directly affect your single biggest asset, and, let's be honest, often your biggest cost. I mean, just look at these numbers. From April 2026, the national living wage for anyone over 21 is jumping to £12.71 an hour. That's a significant hike. This isn't just a small adjustment. It's a direct hit to your payroll costs that you have to start factoring into your budgets right now.
And hey, don't just take my word for it. Stephen Watmore over at Sage said it perfectly. You have to plan for the combined effects on your cash flow. It's the wage increase plus other changes all hitting at once. This is a fundamental strategic challenge, not just a bookkeeping entry.
Okay, if you have any staff at all working from home, even just one day a week, you really need to pay close attention to this. The rules for home working expenses are being completely flipped on their head. That flat rate tax deduction of £6 a week that your employees could claim, it's gone, abolished. But if you, as the employer, reimburse them for things like a monitor or a proper office chair, that payment is now becoming tax-exempt. The responsibility is shifting squarely onto your shoulders.
And there's more you need to know. First, if you use contractors through umbrella companies, be warned. From April 2026, the legal liability for their tax and national insurance could shift to you. Second, there's a new sheriff in town. A new Fair Work agency is taking over minimum wage enforcement from HMRC. And stay with me, because this last one is a slow burn. From 2029, those national insurance savings on pension salary sacrifices, they're going to be capped at £2,000 per employee.
Right. Let's talk about the digital shift. This is where your accounting meets the 21st century, and it's a pretty clear glimpse into the future of how every business will be run.
The good news is this isn't all happening at once. This timeline lays out the roadmap pretty clearly. It starts with consultations in 2025, new Making Tax Digital powers kick in 2026, then a new penalty system in 2027. But the big one, the final destination, is April 2029. That's when e-invoicing becomes mandatory for all VAT invoices. You need to be planning for that now. So, what's the deal with e-invoicing? Well, on paper, it sounds great. The promise is faster payments and fewer human errors. Who wouldn't want that? But let's be realistic. For a lot of small businesses, this is going to mean a pretty significant investment in new software, new IT, and probably a complete rethink of how you handle your billing. Okay, next up, we're talking about key reliefs and investments. This is where things get really strategic, especially if you're looking for funding to grow, or you're thinking about the long-term future of your business and your family. This chart tells a very simple but very powerful story. Right now, when someone invests in a small, high-growth business through a venture capital trust, they get a 30% income tax relief. It's a massive incentive. From April 2026, that relief drops to 20%. That's a huge cut and could change how investors think.
But it's not all bad news on the investment front. While the personal tax break for the investor is shrinking, the amount of money a company can actually raise through these schemes is going up a lot. The annual limit is jumping to £10 million. The strategy seems to be a shift away from small, early-stage tax breaks and towards fueling proper high-growth scale-up.
Now, let's talk about something that is a cornerstone of succession planning for thousands of family-run businesses in the UK: business property relief. Right now, it allows qualifying businesses to be passed on to the next generation completely free of inheritance tax. But that's not all. Here's where the rules are changing dramatically.
From April 2026, the system gets a massive overhaul. Here's how it's going to work. Step 1, the first £2.5 million of your business assets. Still 100% relief, still tax-free. But Step 2, and this is the killer detail, for any value above that $2.5 million, the relief gets cut in half, down to 50%. That means a 20% effective tax rate kicks in. This is a monumental change for anyone with a business worth more than that threshold.
Phew. Okay. I know that was a lot to take in. So the big question is, what should you actually do with all this information? Let's turn all of this into a simple, straightforward action plan.
If you do nothing else after watching this, please do these 3 things. First, get on the phone with your accountant and review your cash flow projections, factoring in those higher wage bills. Second, if you use contractors, you need to have a serious chat about your supply chain. And third, and this is urgent, you have to reevaluate your succession and investment plans. These are absolutely essential.
Now, before we finish, just a very important disclaimer. The information we've talked about today is for general guidance. It's designed to give you a heads up, but you really shouldn't rely on it alone to make big financial decisions. And look, if your head is spinning a little bit right now, that is completely understandable. This is complex stuff. But the good news is, you absolutely do not have to try and figure all of this out on your own. For expert advice that is tailored specifically to your business and your situation, I really do recommend you get in touch with the team at My Tax Accountant. Their phone number is 0208-570-8531, and the email is info@mytaxaccountant.co.uk. And finally, to make sure you stay on top of all these changes as they happen, don't forget to subscribe to their YouTube channel for more essential updates. Thanks for watching.